It's the weekly 30/30 trading list on the ASX. We're reviewing the 30 best momentum companies over the last quarter and those that have had the best improvement in the last week. Gary Gloving's been through both lists and pulled out his favourite charts to look at, dissect, and for us to learn from. Good morning, Gary. How are you?
Yeah, no, I'm good, Chris.
So looking at this list, you've got some momentum leaders, some that have broken out, shot the lights out, a few significant jumps in here. What's standing out to you on this top 30 list of momentum companies?
The thing that stood out initially was that half the stocks on the quarterly list, the stocks that we've been seeing in the weeklies, and also my personal watch list as well. So obviously, if I look at sort of what I think stocks are sort of under, showing relative strength, and I'm starting to break out of technical patterns there. So I felt like every second stock was on my list here this week. So it feels like I'm looking at the right areas. Definitely had a couple of trades going against me in the last week or so, which is sort of probably, a few things moved against me. So that's kind of sounds weird, but been a bit of a distraction. When you have a trade, it sort of goes against you. And normally if I go against me, I'm straight out. But these sort of circumstances sort of like kind of roll one spread there, like an option spread, and then another position sort of gapped against me. So I have to sort of deal with that. So that uses energy and time, and it distracts you a little bit. But look, everything else is looking pretty good here. Really, definitely feels like I'm looking in the right areas. But sometimes you can have the best lists, but you can't trade them all. So the ones that I'm pushing for me, some of the ones I've traded haven't done well. The ones that I didn't trade, which obviously set up, it was just about a choice. I've gone onto it. So that's just trading. So that's sometimes you're on all the winners, and other times you're catching lists. But the main thing is the process is right, looking in the right area, it's the right lists and stuff there. And we're definitely sort of starting to see some interesting emerge there. Definitely some sort of smaller ones starting to come to life here. That's probably the one thing. Some smaller names, obviously the small caps have been underperforming here, so that maybe inflation coming back, and then because the big caps have run, mid caps have run, now smalls starting to come to life a bit. So that does tell you we're probably getting to the end of the move when you start to see smalls going crazy. So that's usually the last part of the sort of of a sort of bull trend there. So they should be the last group popping if you're towards the end of a move here. That's in my view anyway. So but lots of small names having a run here. I think there's a few rare earths in there. So like ARR was the first one. A bit hard to trade a small one like that. I think the BRE, we did cover this one last week, just talking about some of these IPOs coming to market. So there's a really like the IPOs is a fascinating area to trade there. It's very tricky to trade IPOs because there's not much history there. So oftentimes you don't get the best technical patterns there. But if you wait for that little B-wave break there, Chris, like sometimes they're pretty lively at the start there. They sort of have a bit of a pop, come back and retrace, start to build again there. But you got a little bit of a cup and handle there. But for me, that's kind of the first. That'd be only the first time I'd look at trading that and be that little break above that 185 there. So because that had actually broken above that and good volume there, that can give you a little trigger to trade. That's the only way to trade it, in my opinion. Looking at those sort of things there. There is a really interesting video on IBD Live where one of the female portfolio managers talks about how to trade IPOs. Probably one of the best videos on trading IPOs because it's treacherous IPOs. It's really, really, they're quite volatile, hard to trade, but they can move big. So some of the early names, some of the big names when they first come on, when Google first traded, Meta and Apple, and so it covers some of those sort of stocks there. I mean, even some quite a lot of those big names there actually fell off. They were hot early, then they contracted, and then they started building. But there's a really interesting video that sort of covers how to trade it there, and I guess some lessons there. Obviously, trading a bit smaller because you're more volatile. Bit wider on the stops as well. Again, you got to be smaller, but can get some big moves. So that's probably one of the more useful tools out there I've seen on trading IPOs. Not many people sort of cover that, and it is a tricky area. Last week we were talking about yesterday's heroes, Chris, as well on the list. So saw things like 40S and Brainship, even ACW as well had another pop there. ACW is the dementia drug there. So, but yeah, Brainship's had a bit of a run there. ACW gone from, I think there might have been a placement of 2.5 cents there. It's gone to 5.5 here. So some of these smalls are really popping out of the ranges. So definitely getting a bit of activity in some of those smaller names. Even I think RDM, we covered that little cup and handles previously. So just lots of those were sort of were pretty interesting there that we sort of covered in previous weeks. Number 7 on the list was Cauldron Energy there. Got a bit of a VCP happening there, although you've sort of maybe got a bit of an overbalance there with the sell down there. The whole thing is sort of tightening up again. So definitely want to sort of keep an eye on there just because it's not showing too much weakness on the downside so far. I think Cettire is sort of one that did break out of that VCP, has gapped on and kicked on. So when you get that little game change in news, they tend to sort of, gap up and then just sort of keep running there. I think we sort of showed that with NEU and MP1 recently. So, so those oftentimes when you get a pretty good result there and they gap up, they do continue to run there. So, but you don't want to sort of stay in those trades too long there. They're probably good for, I think, sort of 3 to 5 days sometimes is probably the sweet spot for Lilla. But probably stay, I think it's had a good run here now. PWA, a little farmer, that's had a nice little run there. Still some decent volume in there. Probably getting a little stretched. Electro-optic systems, EOS was interesting there. Yeah, that's a big sort of, VCP. I think we covered that last week as well. But showing a bit of relative strength. And there's that sort of classic, we were talking about this trade last week, Chris, how a lot of these sort of kind of leaders, sort of stock showing relative strength. They're just sort of having this little 3-way pullback to the 50 and then just taking off. I just kept seeing this over and over again. This coming back to the 50 and going up there. So I've just kept seeing more of them actually this week as well here. So Temple and Webster, again, there's that, obviously a bit of relative strength there. Again, I think going back here, did come back to the 50 and then bounce from there. Hasn't really come back there again, but these stocks have showed pretty relative strength. You can see that it went up to the high here. It's pretty strong in here, and then it just sort of traded in that sort of tight sideways band. Didn't really sort of sell off here. And then once it's broken through, it's really kicked on again. So, in the past, I've personally been reluctant to trade these sort of stocks when they're looking extended like this. But we sort of know once they have this little congestion breather under the high there, and they struggle to go down, and there's no selling, stepping in there, they can very break up and keep playing. So, this is definitely sort of change in tactics sort of for me looking at some of those sort of stocks there. So as we know, these leaders, they continue to keep leading, pushing on a lot further than everyone thinks as well. One view there. So again, sort of showing relative strength, come back to the 50 again, and then it's gone straight back up again. I don't know how many times I've seen this here in the last couple of weeks. These sort of, stocks showing relative strength, just kind of releasing back to the 50. You can see there, like it wasn't too much sort of volume through there, a little bit there. Just nice little VCP out of there. So just lots of those little patterns. I think Zip was similar. Look, there's that, bloody showing relative strength there, come back to the 50, bounced and just went straight up again. So just something I've been sort of keeping a close eye on there. But also Altium had a big jump there. Again, there's that. You look at that cup and handles there, going back in here, nice and tight little, go back, retest the high, stay under the high, nice little lower handle there. Maybe just goes marginally by the 50, then starts to build through and breaks here. And then look, I know no one's expecting a takeover there, but still that's still pretty. That's a stock showing relative strength, holding up pretty tight. That's a handle sort of that's just, it's only really come back half the range there and then broken through the high again. So a lot to be said for, following the stronger stocks, buying 52-week highs. A lot of those stocks have just continued to kick on here. So pretty interesting there. IPX is sort of one that, this is one that was on my list a while, Chris. I think we covered this one a few times there in the last month there. Because really there's your sort of, there's a first pullback, second pullback, third pullback. So the whole thing tightening up there. So VCP set up in here. I think, once we're sort of, this to me breaking above a little swing high in there I think was sort of pretty positive. Breaking above this level here was another positive there. Did a little bit of a, little tiny little shakeout there, which you kind of expect after a bit of a breakout. I like to sort of maybe try and come back a little retest a few days, just try and shake out some of the weaker hands there. And it's kicked on here, but that, that's again, there's a beautiful VCP pattern there. It's just continue to keep going high there. Pretty good volume as well. So, just a really good setup there. So, FND has continued to stay pretty firm. Again, there's that little tight congestion pattern and pop. Even the pullback, no volume there. Just showing just pretty interesting there. Thought Fire was pretty interesting as well. Just because it sort of had pretty good volume all the way up through here, and then had a bit of a pullback, not too much volume then. A bit of volume, come back in again. Pull back here, there's 4 or 5 days in here, Chris. No real selling here so far. Volume's sort of started to come back in the low again there. So even though the stocks look like it's run pretty hot there, not really seeing any signs of any aggressive selling here so far. So again looking kind of positive there. I think NTI as well. NTI similar as well. Sort of, that's sort of breaking up there, nice and tight in here. Nice little cup and handles again, breaking out little VCP and little handle there. Good volume there, sort of kept going there. Even in here, that's had these 3 or 4 days pullback. Don't see a lot of selling coming in as well. So seeing some of these stocks run hot, but not facing a wall of selling here. And part of that, some of these small caps is it's pretty stale. So the small caps have been underperforming for a couple of years. Those who sort of wanted to get out probably sold out. The rest are just sort of sit tight here. It started to come alive a little bit. Probably new money starting to come in. The old money is sort of like, we're just going to split, we didn't sell that, for the last year or two, we're just going to hang on. So it sort of keeps sometimes those registers can get a little bit sleepy on the small caps, and you can just see them, crack on pretty fast, and then they can really move there. I think Airtasker was a good example of that. Couldn't get out of 2010. I think it sort of stayed under sort of 20, 22 cents for a long, long time. Finally popped straight to 33, and then within a few weeks it came back down to 22. So they really can catch a light, these small ones. But just be careful that when music stops, they can come back pretty quick as well. So, but just I think that comes with the sort of register just getting a bit stale and not much happening there, and then all of a sudden, they can just sort of pop it and move through. But just remember, those stocks do have a lot of losers ahead. So once they do get a reasonable run, so that's just something runs 20 or 30, 40%, sitting in their portfolio, people held on, they go, I might be able to, get something for that now, so that it will draw a few more sellers in any big sort of spikes there. So just keep that in mind there. ATG was interesting one here, nice little VCP again, Chris, sort of, pull back here, get shallower again. Definitely started to break out of a little B wave there. So this sort of gave us a bit of a break above a little swing high. And then we've just gone above that high there yesterday. I saw that last night. I think you sent that through yesterday. I thought, well, that's interesting. It's just gone above that high, which is a pretty good sign here. So again, sort of just seeing those definitely seeing those VCPs and a couple of handles there. Probably some smaller names and yesterday's heroes sort of in there. But so they're all sort of catching a light here, but just keep in mind there that those some of those names have still got a reasonable amount of headway in front of them, I guess.
So if they're the quarterly momentum companies that you're looking at the start, you'd said you're happy with looking at the list and seeing a lot of these leaders in the momentum list are coming from your watch lists and the companies that we've looked at before on the launch pad. So the launch pad, what we're looking at here is these weekly movers. They're the list that you're talking about, isn't it? You're talking about they're progressing from this launch pad that we're about to look at into these momentum leaders that you've just run through.
Yeah. So I'm looking at a mixture of your the weekly lists, the ones that I like in that list, and I put them into my like an active sort of watch list for me. I'm also looking at sort of stocks that have had a bit of a jump initially and had a bit of big volume as well, Chris. Like they had their first leg up, big volume there, and then they might go through a little bit of saturation here as well. So they go on my list. And then I do try and look at sort of what's strong for the month and what's strong for the last 6 months, and see what names are sort of holding up as well, showing relative strength. Looking for that impulsive and then maybe the corrective activity. And then just put him on the list there and then weeding through some of the stocks. I mean, sometimes you go through the list and go, that looks really interesting. But then I look up the company and I go, I don't think this might be, not I have my doubts about the quality of the company sort of, when I start to look at them a bit closer. Yeah. So you sort of, to me, I do like to scramble a little bit for the company or the sector. So, I mean, like if we've seen like the retail names all pop up here. So if I started to see some of the retail names do a little BCP, okay, well, the sector really is catching a light here. If that's sort of doing a little BCP or a couple of handles, something like that, then I'll probably, it looks pretty good. Or if another sector's showing strength there, because obviously healthcare has been pretty robust, technology and financials as well, been pretty robust. They're probably the three leading sectors in the US market last year. So they've been pretty strong. And then just looking for those sort of stronger themes as well, making sure they sort of fit in with those. As we probably there, yes. I think it was Sam Weinstein who sort of suggested that if you have two charts that look exactly the same, the one of the strongest sector is going to perform. I think that stats are like 2 to 1. They put outperform, or twice as likely to perform better. So so yeah, the odds are definitely in your favour if you're in the strong segment. So we look at our price action, but also got to be looking at the sector as well as an important criteria there. So that's what we just want to put all the odds in our favour. That's the key there.
Okay, so when you're looking, though, you're putting them all together, obviously you're looking for sectors. If you go through this week's, you've been through the top 30 in that launch pad. Are there any that are standing out to you as either lessons or ones that you'll add to your shortlist or charts that we can learn from?
I guess one thing now, I did see a few, like a bit of a mixed bag through there, but starting to see a few lithium sort of rare earth names popping in there, Chris, as well. So that's been a sector which has been under the pump for quite a while here now. Price is really coming off quite dramatically as well. And I did see the other day that a lot of the Chinese production has been cut back there. So some of those lithium mines in China, they've basically gone into shutdown mode. So actually shut down. Yeah. But I didn't realize too, actually, with some of those sort of rare earth metals as well, is that once you actually mine them, if you don't process them, they lose a lot of their obviously they oxidize and stuff there. So you really sort of get a process straight away. Sort of they can't be sort of sitting, it's not like sort of gold or silver, but just sort of copper will sit out in the hot baking sun. I think once you sort of dig it up there, you really got to process it reasonably quickly and stuff there. Whereas some of it can become worthless there if it's sort of it's not sort of put into the refining process, in a reasonable sort of amount of time there. So, but you're definitely seeing some production numbers come off in China there, which means they've sort of eased up on the production. That's probably to do with prices too. The prices come off, it's unprofitable, so you start seeing the smaller names come off here. So the one thing I sort of noticed there, when you see those contractions in the head commodities, you're really looking for the lowest cost producers, because they're always the ones that come out. The high, the new companies are probably operating at higher cost level, they don't survive. But the stronger names, the ones that the lower cost basis, they're the ones who sort of come out strongest there. They end up picking up all the carcasses as well and come out stronger. So that's the way I sort of look at it there. But that's definitely something of interest there. It's something, and we've seen a few of those names pop up there. But I thought I was just going to highlight Ordinate, because Ordinate's obviously been one of the sort of a bit of a leaders there. But this one did, talking about coming back to the 50 and bouncing there. This one came back to the 50 and went through it. So I was watching this back to the 50. I thought, maybe it's going to hold here, but it actually broke there. So just sometimes they do break the 50. So I know we've tried a lot lately that have come back to the 50 and bounce from there. always got to be prepared for the fact that they don't. And we saw like 18 mil came back for one day below the 50 and snap back in the next day and went straight back up again. But it doesn't always work, the 50. Sometimes they will break there and keep going. And Paul Tudor Jones, he doesn't like to be long anything. If it breaks the 200-day moving average, and I know Bill O'Neill, anything below the 50, he was out of everything. So he wouldn't be long any stocks that run a day 50 moving average. So you sort of got to have something, definitely got to have a point there, I think, anyway, where you kind of line in the sand where you won't be looking at the stock if they break a certain point. So I personally do like that 50. And so from what I've seen there, probably for 80, 90% of the trades at work, they generally stay above the 50. If you're sort of trading sort of stocks under the 50, you're probably taking on a little bit more risk and a bit more danger. Stocks you're looking at there. But yeah, some of these smaller names there. So there's quite a few sort of metals in those early ones there. I think the Hammer Metals and Highfield, Altec batteries. So definitely, Novonix is Syrah as well. So we're definitely seeing some of those rare earths starting to sort of shine again. So they'll make a bit deep there, but definitely bouncing there. But I thought PCC number 6 was interesting. Potential bit of a cup and handle. There's some pretty good volume all the way through here. A little bit of a smaller name there, but it is sort of holding up pretty tight here, sort of rounding off, and it's pretty good volume there. So didn't think that looked too bad there. And I thought the weekly looked pretty solid as well. That's a pretty impulsive move there. Look at that, pretty low volume all the way through here. Has a good rally and good volume, and sort of tightens up. And every time it's had a bit of a rally, it's had a bit of a spike in volume there. So that's definitely one to keep an eye on. That looks sort of pretty constructive to me. CAY, other cup and handle there as well, Chris, to sort of see how that sort of raced up here. That's come back to raced up to the high really quickly and then traded in a really tight band. Look how tight that is under there. And eventually it cracks through here. And then now it's sort of gone off. Well, it's a bit small, but there's that sort of classic, that's a type of pattern we want to be looking for as well. Just go back and retest the high, congest under the high, and start to, move through there. So again, a bit of a smaller name, but that's the right sort of setup there. EML sort of had a bit of a pop here. Imugen was sort of one that I think's interesting there. Had that big move there, big volume, had a bit of a pullback, had a bit of a bounce against volume again, pull back a lot of volume. Didn't sort of, look like it might get going here, but then it sort of contracted there. But it is sort of staying, building high low here. So just want to sort of keep an eye on there, just because that's pretty lively volume there in the early days. Oftentimes they'll sort of keep grinding there. So but that's pretty interesting in June. Just definitely starting to see some of those healthcare and biotech names start to get a bit of traction. So good. They talked about Syrah, RDX, bit of a newer name there, but bit of a VCP in here, but pretty choppy. So get a bit of a hard one sort of trade. Thought Bitcan looked quite good, but still sort of, it looks started to break broken a couple of swing highs there. Some possible change of character there. Just not seeing great volume through here, Chris. Not sort of seeing the strong volume. So I did look at the reports and stuff there, and the reports are okay. This hasn't had a great, so look, being a smaller name here, maybe it has a little pop here, but I just don't know if it's got the legs there or great reasons to be in there. So, it is a sort of a small company, which is not really firing, I guess. It's going okay, but it's just not going hot. We want to be at hot sectors there. Sort of down to there, come back. It's sort of, break the 50, break above here, come back, settle the 50, and come through. A bit hard to trade there, but seeing a lot of these stocks here around reporting season, some big moves in reporting season. Some, it's hard there. Sort of like the professionals generally don't trade into earnings unless they've got a big buffer. So what I mean by that is if they've bought a position that's had a bit of a run and they report, most of them would take the trade off or would take at least half the trade off, take the integrity risk. They probably don't go into report. Like most of the pros don't hold stuff in reporting season. or into reporting dates and stuff, they just because of the risk there, unless they've got a reasonable buffer. But you'll find that they'll generally sort of de-risk into it there. So holding sort of stocks, into reporting there can be tricky. And you're really going to have a sort of strong feel. I mean, me personally, I think I held one into Elders there in the last reporting season, but I ended up cutting it half the day before. And I had a bit of buffer there, so I was prepared to wear a little bit if I got it wrong. Thankfully, I didn't get it wrong, but that's, you got to protect the capital. That's the most important thing there. SPR I thought was pretty interesting as well. Sort of stock's just been trending pretty nicely the whole time. Pretty solid there, not too many pullbacks there. Still sort of showing some decent volume coming in on the pullbacks. XRO was sort of one that I featured in the weekly there. Just been hugging that 50 day, also the 50 week there on the stock as well. The longer term chart. Sometimes the longer term setup, you can see this is sort of built previously along the 50, and then it's done the same thing here as well, and just showing a bit of strength as well. The volume profile is pretty solid, so that does look quite good there. Definitely seeing some of those tech has been pretty strong. We know some of these companies are sort of going from sort of being unprofitable into profitable, so that's, they're definitely catching a bit of the light as well. ACL had a little bit of a pop there, but it hasn't really gone on with it. Some other names that I sort of talked about last week too was those. Did talk about the ACE, which is the Consensus, Chris, which was the one that has a little cameras for catching your little speed cameras. So see that that looks like they've been acknowledged as the preferred provider in the States there, and that's really taken off. It's had a great run. But look at that, there's that tight price action underneath the old high. Just built there, and once a thing popped through here, it just kept going. So, that's a pretty interesting company now. It's actually one, as Stanley Druckenmiller, if you can imagine a company making a lot of money in the future, that's, that definitely is one that I see that. I know sort of even things like Playside, sort of that trend stayed pretty strong. But sector for me, Chris, was I noticed that we're seeing the lithium space there, just a few names pop up. So definitely saw Mineral Resources trying to find a little bit of. I'm doing a bit of work here, but that's pretty interesting where that is coming in. So PLS as well as sort of, this is like a big 50%, big sort of Fibonacci range there. It's doing a bit of support as well around here. The thing I like about the PLS is that we've got our low in place, some pretty big volume down there. So that's kind of exhausted type volume, and then get our first high low, second high low, third high low. So we've got our 0, 1, 2, 3 pattern there. So something I'm experimenting with my super fund this year is just looking at the 0, 1, 2, 3s. And then, so you sort of first day up here, sort of, by the daily break, got the nicest stop down here. So really tight, so really good risk reward basis. And then, so I think I've got like a 338, 339 sort of stop. And then, if I'm wrong here, it's pretty tight. But I don't lose too much if this thing gets going here again, and it's a great move in there. I think LTR's had some interesting as well. Again, that big exhaustive volume here into the low, and then you sort of, I think I had a bit of a bounce, came back, did a little false break on here, and then moved up. Do love those little false breaks, just sort of small ones. I generally try and stick to the bigger stocks for the false breaks, but it's definitely a sector which I think was pretty interesting. And that, if you look at the weekly on LTR, one of the things I do look for is this is what I call like in a bull trend there. This is like the fourth wave pullback, and then you get your fifth wave into the high. And I've often noticed over time, some of these big declines, they come back to the fourth wave, or a lot. So that was sort of 87.5 cents, and lo and behold, there, 87.5 cents there, a couple of weeks ago. So it's just a big level. I just see that over and over again historically. So there's something I was watching for there. And as soon as I saw that little false break on the daily, I sort of got my weekly level, I've got my little daily break. Again, it's all about risk reward for me. It's not, I'm prepared to be wrong and prepared to get it wrong here. But if I was wrong here, I wasn't going to risk much. And it's had a nice little move here. It's a pretty good volume there, a little pullback consolidation. Now it's gone above our first high low here. So So now we've sort of got a few year highs sort of building. So just got a few on that name there, a few names on that list there starting to sort of show something. So yeah, it'd be interesting to sort of see whether that sector can grow here. Still got some suppressed prices there, so they can sort of still fail. I think we saw some of the gold names with a bit of a surge, and then they sort of fizzed out as well. So got to be prepared to be wrong here, but definitely some good early signs in some of those sort of areas there. I'm a little nervous about the overall market, Chris. I sort of still probably 15 and a half weeks up here without a pause there. I mean, we're only 5 times historically before S&P's rallied this strong in a short period of time. So, some incredible sort of moves here, just pretty robust there. So, but look, just going to trade the setups, follow the process. Yeah, just sort of stick to that.
Well, I was going to ask you for an insight to end the weekend, but I think that might be it, that we run, or the S&P 500 has run so well, so strongly for the last 15 weeks. The odds aren't in its favour to power on, and that coincides with the cycles and the presidential cycle that you've talked about many times. So still going a little bit light, or keeping tight on your stops in the week ahead?
Yeah, I can do. I sort of did sort of light off there, but to be honest, I saw those lithium names sort of setting up there. I like those just because the risk reward was pretty attractive. So those sort of definitely stocks that can motor. And again, I just I guess I was thinking about some of the Paul Gales who talked about Paul Tudor Jones last week about after you've made a good trade, you sort of got to keep your ego in check, because that's when you get in trouble there. So I was looking at some of his sort of quotes and stuff there during the week as well. So I'm always thinking about losing money as to making money. So he's always looking at, he talks about basically playing great defense, not great offense. So all about managing the risk there. Each day you basically got to look at your positions like they're wrong, so never average losers. And just don't focus on making money, focus on protecting what you've got. So like a lot of his rules are really around just focusing on, focus on not losing money, just keeping everything sort of tight there, and just risk control, and just sticking with the trend. It's basically your end of the day, your job is to buy what goes up and to sell what goes down. So it's just as simple as that. So, but yeah, he's a pretty aggressive trader, someone with a pretty high risk reward, generally risk reward sort of basis as well. But all his rules are centered around risk management, about checking his trades every day, making sure, what if I'm wrong, so he's not trying to talk himself out of the trades. He's just trying to manage his downside risk continually. So he's continually every day looking at what risk he's got on the table. You're not looking at the upside there. That's sometimes when you get trading in a bit of you go through a nice sort of period there, or trading well, you sort of take your eye off what you're risking, how much you've got on the table there. Because next thing you know, you're sort of, the market's rallied 15 weeks. You've got yourself 95% invested. Your stops are all like 4 or 5% away, and the market goes whack. Everything gets knocked out, and you haven't. You thought, I should have really, if I've been reviewing those, after those trades, I should have already moved myself to break even, because I'm already 1.5 units in profit. You should, so a good trader will always be sort of managing the risk there. Because I know today I was looking at adding a position on in the same sector, and I'm already thinking, well, I'm already getting overloaded in that one sector. So I'm a little heavy. So if I really want to add to that sector, then I need to basically reduce my risk in that sector. So one way I was looking at, so those two stocks have really run now. If I can move my stock to break even, then I've taken 2 positions, I've taken the risk off that trade. So if it pulls back, I risk nothing. Then I can put another trade on with the same amount of risk, and I've still got the same amount of risk, or maybe even slightly less. If I can move 2 trades up, put another trade off the same amount of risk, I've actually reduced my risk, and I've got an extra position on.
So you've got 3 times the amount of capital allocated in that one space, or that one industry or sector, with only 1 unit of risk for 3 units of capital, effectively.
Yeah, that's right. So sort of like if you've sort of got 2 winners there and you want to, add to another position there, you sort of got to at least move one of them up there into break even, put another position on the same risk, because therefore you have it increase your risk from the prior day. And if you can move, say, 2 up to break even and then add another position on there, you've actually reduced your risk that you've got it, so you've actually leveraged up, got more into the position size, and you've actually reduced your risk as well. So it actually pulls back. Instead of saying having two units of risk on, you've only got 1 unit of risk on. So if you get knocked all of a sudden, US market, stock fell over hard or the sector fell over hard, then you're trading there and it all collapsed. You get knocked out on that. You basically lose 1 unit, but all of a sudden you're out of all 3 positions and you may have lost 1 unit. But if they all keep running, then you just scale it in and all of a sudden, bang, if they get another, all of a sudden you say you got one unit of profit or a big move on that day, all of a sudden you've got, 3 times the sort of leverage there. So that's the way sort of scaling in works. You follow sort of Mini Beanie and stuff there, he scales in there, but he never increases his risk. So he's really trying to sort of keep edging each stop up there, manage that. So, I think I like using a spreadsheet so I can sort of watch my position size and my risk and my stoppers. And it's sort of in my spreadsheet each day, it tells me what my maximum risk is I've got on. So if every position were to fall, were to pull back and stop me out, how much would I lose? That's really important to actually acknowledge and understand that number and understand that risk. Because if you feel comfortable with that, then you're comfortable trading. It's usually sort of when people don't know what it is. People underestimate what it is. It's twice what it, if you sort of saw that and you go, well, that's a big position. If that did come back and knock me out, I'd say it knocked me out, say 20, say it was like a 15, 20 grand buffer there, and that was what you potentially lose. That on your account size there, that might be enough to go, well, that's too big. I wouldn't want to lose that and get knocked out there, because you've got to be prepared for these sort of bigger moves sometimes. We've been running for a long time here. Oftentimes when a market does sort of give in after a big run like this, it can be short and sharp, so it can catch you sort of out pretty quickly. If you remember sort of COVID there, when that market just rolled off, it just bang, and then even before that, it might have been the pullback before that one was pretty short and sharp as well. So just be prepared for everything. Make sure you understand what's at risk every day in your portfolio. So where you are, where your stops are, and if you sort of know that you've got 98% of your capital, will be protected if everything fell over, and that's pretty comfortable with that. So if you know that 2% of risk is maybe going to make you maybe 12 or 20%, that's worth it. That's worth sort of having on. So just understanding those risks is so important there.
Well, that's really something good. Great insight to take to the weekend is looking at the portfolio. Yes, I might be fully invested. How much am I actually at risk? How much am I looking to gain? Am I happy with that? And that's another way of having another perspective of looking at the portfolio. So I think with those insights, we'll say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.
Gary's mentioned his Tuesday report, like Xero and a couple of other companies he's looked at in more detail, clients that he's trades that he's working with his own clients and his own portfolio. They're in the Tuesday videos. Other insights like the 321, spring bottoms, and that kind of thing. There's a whole playlist on the right-hand side, and on the left is his Twitter handle if you want to follow Gary over there.